Hello and welcome to the show today. We're going to try to understand if there's the possibility for a summer rally in equity markets. We'll also have a look at the US dollar, which is causing quite a bit of damage at the moment in emerging markets. First chart we're going to show today is a mosaic of all the main dollar pairs. And what we could see on the top row, and this is a daily basis, so the perspective over the next few months, we have the different currencies quoted against the dollar, so euro dollar, cable, Australian dollar, and New Zealand dollar. And then all the other currencies quoted in the direction of the dollar, so dollar yen, dollar Swiss, dollar CAD, dollar NOK, dollar ZAR, dollar Russia, dollar Brazil, Mexico, Turkey, Korea, India, and China. And what we could say is that at the moment, although the dollar has had a very good run over the last few months, most of these trends are still in place. Some are reaching some degree of exaggeration. We could see a bit of oversold condition here in May on the euro, but it has hence attempted to bounce and hasn't done very much. On cable, we're still pretty much in the middle of the range, so we would still have some leeway to the downside. On the Australian dollar, a bit of exaggeration here, but our targets are not fulfilled yet. Similarly on New Zealand. Then on dollar yen, no exaggeration, still the possibility to move up. Dollar Swiss, pretty much the same. A bit of exaggeration on CAD, no exaggeration on NOK. ZAR still seems to be moving up. Dollar Russia, well, a bit of exaggeration here, but still in an uptrend. Brazil, similarly. Mexico had a bit of a counter trend here, but it's still heading up. Turkey is a bit exhausted, but still in an uptrend, as well as Korea against the rupee, still moving up, and against the Chinese one, still accelerating up. So in general, although some of them are showing a bit of exaggeration, and if we look at all these pairs, possibly the ones related to commodities are a bit stretched in terms of downside versus the dollar, we are still quite strong on that dollar trend. So we might see a bit of wobble in the first half of July. We could see some of them correcting a bit, but in general, it still seems that the dollar remains strong and possibly until midsummer. Now we're going to look in more detail at the euro. And the euro here, we're still seeing it as a correction up that started in 2016, fulfilled its target, hit the support around 125 of the higher end of our corrective targets, and has since been reversing down. Our view is that all this move from the end of 2016 to early 2018 was a correction in a long-term downtrend. Now the correction at the moment is still in place. You still have a bull indicator here, but the risk index is possibly reversing lower. We believe that it probably is in a first leg down here that will lead us into midsummer. We could see a bounce towards the fall on the euro, and then a new acceleration to the downside in our view in 2019. Now looking at the daily, we're still in a downtrend. We've seen a very flat consolidation since May. We had an intermediate low and some exaggeration here, but at the moment the trend still seems to be downtrending into possibly late July, August, and a range between 114 and 110. So at the moment we are still quite negative on euro dollar. This consolidation may last a week or so more, but it seems like it's not going to bring us much more. Now looking at the hourly, we can see that we've had a bit of a reaction here over the last week or so. It has pretty much reached the lower end of our corrective targets. It could already be rolling over, but the risk index seems fairly low and wanting to bring a bit of support perhaps. But as long as we stay below the higher end of these corrective targets, around 117.70, this is just a counter trend move. And looking at the daily, which is still quite negative, we do think that any foray into this area here between 116.7 and 117.7 is probably an opportunity to sell back into the daily trend. Now it's also interesting to look at equities, and we've also put on a mosaic here of equities. The idea here is that the momentum of US data may be quite strong and may help push some of the equity markets higher, but that in general, the risk reward over the next few quarters is getting very, very stretched, and many markets have probably already started to turn lower. So we may expect a reaction up during July, perhaps August, but it's going to be a difficult one to kickstart, especially that we expect the dollar to still be quite well bid. So that would mean that if we do have very strong data out of the US markets may be moving up. That will help the dollar. It will also help European markets, at least the stronger European markets, as a weaker euro is going to help them move up. But there might be less respite on emerging markets with a stronger dollar, which could continue to underperform. So let's look at the different markets. We look at the S&P, it's still heading up. It's in a bit of a no man's land at the moment with no impulsive targets up. We believe that if it holds pretty much here towards the 2,700 level over the next week or so, it will manage to attempt a last move up. The Nasdaq is still heading higher, but it's pretty much exhausted, but we could still expect it to retest one last time into possibly late July, early August. The Dow Jones Industrial, well, very big companies, a lot of foreign revenue, so a lot of translation risk, so not very advantageous for them to have a stronger dollar. So here you already are possibly in a downtrend. You may expect a reaction during July, but you'll probably have difficulties of making new highs here. Similarly, on the MSCI World Index, which is denominated in US dollars, but relates to many foreign securities. Now the FTSE has been quite strong, one of the strongest ones. It's still in an uptrend. The pound has come down quite a bit against the US dollar, and that is helping the FTSE 100 index, which does seem to have one last leg up to perform into late July, August. The CAC had a very strong run in new highs back in May, has seen quite a strong correction, but has probably reached the support of our corrective targets here, and over the next week or so could be turning up and moving up to retest its highs. The DAX a bit weaker. It seems like we're only going to get a counter trend reaction here. It may have already started to turn. Similarly with the Euro stocks, although we could see here that the risk index is quite low. Swiss market, very defensive, so it has suffered quite a bit of all its big pharma and Nestle, which account for about 60% of the index. And then 20% is also financials, and that has probably helped it underperform over the last month or so. The Nikkei, not too much political risk in Japan. The yen is quite weak versus the dollar, could be breaking out above 111, so that should help the Nikkei, and we believe there's probably one last leg up here, possibly towards new highs above 24,000 over the next month or so. Now, looking at emerging markets and China, we've seen quite a large sell-off over the last month at least, and then over the last 6 months. We don't think it's over yet, but possibly most of the move has been achieved as we are already oversold here on the risk index. So we would see it lingering down slightly lower, still being impacted by a dollar which remains relatively strong, but lifted a bit by the rest of the markets which attempt a last move up. Now, I'm going to fast forward here and just wanted to look at other assets just to complete the picture. We're looking first at US Treasury yields, and US Treasury yields, well, they made it up to about 3.1, which was quite a nice achievement, but they're still in an uptrend. And our view is that they may attempt one last move slightly higher, perhaps towards 3.2, 3.3 over the next 2 months. Brent is quite not finished to the upside either. It seems like it's going to break out above 80 again, if it hasn't already done so, and possibly lead us into the mid-80s, possibly even the mid-90s. That is, the two trends here are quite stretched. We're wondering if we're not going one bridge too far, but we do think there's a last push up and then a reversal, possibly towards midsummer and down towards the end of the year. Now, inflation expectations, this is actually tips against treasuries of the same duration. Well, people are still buying protection against inflation, less over the last month or so, but it's still only a correction down. It seems to have stabilized, and we believe there's probably a last push up here too into July, August. Similarly, people buying high yield versus investment grade, they're still doing so, they have been still doing so up to recently, to protect themselves towards higher long-term yields. That said, we've had quite a strong correction here, so we might attempt one last move, but we are already quite overbought. So we're getting towards the end of this trade of high yield versus investment grade. But a last reaction up, possibly not making new highs, but a last reaction up is still possible. Now copper has corrected but has probably found support here, and our risk index is quite low, so we would expect it to stabilize over the next month or so and attempt possibly a last move up into August, maybe September. It seems to be slightly further in time. Maybe this means that we get some kind of a late reaction on industrial metals, China, and all related themes towards late July, August, perhaps early September. The German Bund still moving lower. It has probably turned for this cycle, but it's getting a bit oversold, so you may expect some kind of a bounce here during the summer, accompanying risk assets higher. Gold, well, gold is not faring very well in this strong dollar environment. It seems a bit oversold, but it could still make it down towards the low 1200, even below 1200 towards 1170, and possibly bottom out at some point during late July, August. And that will be a strong opportunity, because all this, everything we're describing here, is basically a distribution phase with possibly new highs on some risk assets, possibly a retest or just a correction on others. And we believe that distribution is probably going to end out towards September, October, in a reversal to the downside in most risk assets, and that the risk-off environment may then perdure possibly into mid-late 2019. So quite a strong correction down we expect afterwards on risk assets. So then possibly looking at late summer, look at gold. It might be a great opportunity to be able to protect yourself towards this more defensive environment. And finally, we're also looking at Bitcoins. Well, Bitcoins are still moving lower. Our targets, well, huge volatility, so it's very difficult to have precise targets, but they are in between 5,300 and 1,150. It seems quite oversold here at the moment. So if a risk-on phase materializes sometime in July, you might get a bit of a rebound here. And given the volatility, you might have a decent shot at a few thousand points to the upside. But in general, at the moment, still quite a strong downtrend. And that's it. We wish you a very good start to your summer. Hopefully, if you're on holidays, enjoy them, and speak to you soon. Cheers. Bye-bye.